past few months, the government has announced several measures that will change the way we earn, spend, invest, and are taxed. With the financial year 2022-23 kicking in, there are various amendments in the tax rules that are also kicking in. These changes will include both the addition of new rules as well as reforms in the existing ones. So for those who have forgotten or who have missed out on some of these important announcements, here's a list of 8 rules that will change your financial life starting today. From EPF interest rate, taxation on virtual digital assets, to tax relief on COVID-19 treatment expenses and compensation, there are several rules pertaining to personal taxation that are going to change. Hi, I'm Namita. Welcome to IndianMoney.com. Here's a list of tax rules that are being implemented starting today. So the very first one is new tax rules on EPF interest rate. Effective 1st April, tax will be imposed on interest earned on contribution towards EPF or Employees Provident Fund if the amount is in excess of the threshold limit of Rs 2.5 lakh every year. This new rule is governed under Section 9D of the Income Tax Act. For the purpose of calculation, the contribution to the PF accounts up to Rs 2.5 lakh is tax-free. But if an employee contributes beyond the set limit of Rs 2.5 lakh in a given financial year, then tax will be imposed on the interest portion earned on that excess contribution. It is important to note that only the interest amount that is earned on the excess contribution will be considered for tax calculation and not the entire contributed amount. Now let's understand this with an example. Let's say if an employee contributes in a total of Rs 5 lakh towards EPF in a given year, then out of that Rs 2.5 lakh will be taxable and the interest earned on that excess amount will be taxed in the hands of the employee year after year. Now remember, this rule has been introduced targeting the high class taxpayers, preventing them from taking advantage of the government-backed scheme. It is to prevent them from parking their excess funds in EPF to earn tax-free interest. However, note that low and middle class taxpayers will not at all be affected by this rule. The next one is updated ITR filing. The Finance Minister also gave respite to people filing their revised income tax return from this fiscal. Earlier, you only had a window of 5 months from the due date of filing returns to revise the tax returns. Now there is a new provision introduced that allows filing updated tax returns within a period of 2 years from the end of the relevant assessment year. However, the updated return cannot be filed to report additional loss or decrease in the tax liability. This provision is introduced to provide an opportunity to include missed or undisclosed income or any other error leading to less filing of tax in the original tax return. Now remember, when reporting such additional income, the taxpayer will also have to pay additional tax at the rate of 25% if the updated return is filed between 1 to 12 months, which is the first year, or 50% on the additional tax if the updated return is filed between 13th to 24th month, which is the second year, from the end of the relevant assessment year. The tax is required to be paid before the filing of the updated tax return, and proof to that extent is required to be attached while filing the updated return. The next one is taxation on virtual digital assets. Union Budget 2022 announced a specific tax provision for virtual digital assets. The government said that any income from the transfer or sale of any virtual digital asset such as bitcoins, cryptocurrencies, non-fungible tokens shall be taxed at the rate of 30% plus cess and surcharges. Besides, it also proposed to include a provision for TDS which shall be inserted under Section 194S to the Act, which provides for deduction of tax on payment for the transfer of virtual digital assets to a resident at the rate of 1% of such consideration of the above monetary threshold. In addition to this, loss from the transfer of virtual digital assets cannot be set off against any other income. Now let's understand this with an example as to how TDS work. Now let's say a user buys a Bitcoin that is valued at Rs 1 lakh. Later in the year, let's say the value drops to Rs 50,000 and the person decides to sell his holding at the loss of Rs 50,000. So when he withdraws Rs 50,000 to his bank account, then he will only receive 49,500 after the deduction of TDS at 1%. Now let's say he hasn't made any other transaction in crypto for the rest of the financial year. So while filing tax returns, you will only show that you have booked a loss of rupees 50,000 and hence TDS of rupees 500 will be refunded to you. Since you have made an overall loss in your crypto investments, you aren't supposed to pay any tax. However, in the upcoming year, next year, suppose you have made a profit in your crypto investments, then you will have to pay tax on the net income after setting off the loss from the previous year. Now, there are certain things that needs to be noted, and those includes, the very first point is crypto transactions for the ongoing year, which is till March 2022 period, will be taxable. The provisions related to 1% TDS will come into effect from July 1st, 2021, while the gains or the profit you make on the transfer of VDA will be tax effective from 1st April 2022, that's today. For the purpose of 194S, the threshold limit for TDS deduction is rupees 50,000 in the case of specified persons and rupees 10,000 in case of non-specified persons. Now, specified person here includes an individual Hindu undivided family whose total sales or gross receipts do not exceed rupees 1 crore in case of business, or rupees 50 lakh in case of professions during the immediately preceding financial year, or it includes an individual or Hindu undivided family who do not have any income under the held business or professions. In such a case, TDS under section 194S is required to be deducted only if the amount of purchase consideration for the purchase of the virtual digital asset exceeds rupees 50,000 during the financial year. Now, in case of a person other than the specified person, which includes firms, limited liability partnership and companies, etc., TDS under section 194S is required to be deducted only if the amount of purchase consideration for the purchase of the virtual digital asset exceeds rupees 10,000 during the given financial year. Now remember, losses from virtual digital asset transactions can't be carried forward. The benefit is available for businesses, mutual funds, stocks, but not for the virtual digital assets. Also remember, the gifts for such virtual digital assets are to be taxed in hands of the recipient. While calculating the income from the transfer of VDA, no expenditures are allowed as deductions except for the cost of acquisition. Income tax return form from next year will have a separate column to declare the gains from crypto. However, taxing cryptocurrency does not legalize such transaction or currency. The government is still working on the legislation to regularize cryptocurrencies. The next change is with regard to tax relief on COVID-19 treatment expenses and compensation. Tax exemption has been provided to persons who have received money for COVID-19 medical treatment. Likewise, from today, money received by family members on the death of a person due to COVID-19 will be exempted up to rupees 10 lakh for the family members if such payment is received within 12 months from the date of death. The next one is surcharge on LTCG or long-term capital gain. Presently, there is a cap of 15% surcharge on long-term capital gain on the sale of listed equity or mutual funds. But from today, 1st April 2022, this cap will be extended to all the long-term capital gains made on all assets. The next one is state government employees NPS deduction. State government employees will now be able to claim deduction under section 80 CCD2 for NPS contribution by the employer up to 14% of their basic salary and dearness allowance, which is in line with the deduction available to central government employees under the said section. The next one is tax exemption for disabled persons. The Indian government offers tax relief to an insurance scheme for disabled persons. So now the parents or the guardians of the differently abled person can also avail this policy. And the last one is no extra tax incentive for affordable home buyers. For financial year 2022-23, the government will stop the benefit of extra tax exemption under section 80 EEA for the first-time home buyers. In the budget of financial year 2018-19, the government had actually announced an additional rupees 1.5 lakh income tax relief over and above rupees 2 lakh under section 24B on home loans for all the first-time home buyers who owns a house of up to rupees 45 lakh. This facility was later extended in the subsequent budgets of financial year 2020 and 2021. Therefore, such home buyers could actually claim a maximum deduction of up to rupees 3.5 lakh using Section 24B and Section 80EEA of the Income Tax Act. But now, heading into the new fiscal, home buyers who want to go for affordable housing will have to pay more tax from starting financial year 2022-23. So these were some of the tax rules that are coming into effect starting 1st April 2022. Now, so far we all knew that March 31st, 2022 was the last day to file our ITR. However, there might be people who have not yet filed their ITR. And if you are among them, then don't worry. Starting this year, let's learn more about tax planning and let's file our ITR on time. For more information on tax planning, we have developed an exclusive course for all those on tax planning, which is available only on our Financial Freedom app. So hurry up and download the app and learn A to Z about tax planning. Also, before going, do not forget to hit on the like button, subscribe to our channel for more such financial content, and do not forget to hit on the bell icon to get notified for our next video. Thank you for watching IndianMoney.com. Get wise, break free.